All right. We have another fantastic talk coming up for you right now. We will move from what's next for France on the global scale right into the new phase of exchanges. We're going to talk about trading ventures to financial infrastructure, and this will be hosted by Bybit. So at this time, I would like to welcome Georg Harer from Bybit to the stage, who will be moderating the panel and introducing his colleagues to you.
Much for the introduction and the warm welcome here. A very good morning from my side, and thank you to the panelists for joining us on this, I think, very exciting topic, the new phase of exchanges from trading venue to financial infrastructure. Let's start with a quick round of introductions. Peter, if you would like to start.
Well, I am Peter Kerstens. I'm advisor for technological innovation, digitalization and cybersecurity at the European Commission's Financial Services Department.
Hi, I'm Jacques-Olivier Schatz. I'm the CEO of Xpollens. We're a banking as a service company owned by BPC, one of the biggest French bank.
Hi, good morning. My name is Yoyee. I'm the head of executive of the institutional and enterprise B2B business with Bybit.
Thank you. And myself, I'm Georg Harer. I'm the co-CEO of Bybit EU. Now to the topic. And maybe I want to start it with a bit of my background story. I remember the first time I was introduced to crypto. It was in 2012 by a friend, when essentially there was you could mine it yourself, you could host it yourself. Then there was this state-of-the-art platform called Mt. Gox for some time until it wasn't anymore. Later, 2017, 2018, 2019, we saw the inception and then the rise of the big international exchanges, but also some local players, also here in the EU, that were growing. And now, if you will, it's almost 18 years after Bitcoin was conceived, if you will. We are at the turning point. Exchanges are still relevant, of course, but if you just here look around, you see it's much more than just selling and buying crypto and trading. I think it's going to be very exciting to see where is this technology and this industry heading. So my first question, and it's a question to all of you, and we can start with you, Yoyee. We are in a stage of having matured trading venues, crypto exchanges, but in this race to becoming financial infrastructure, are crypto exchanges actually building new and better technology, or are we by now just as slow and are we just slowly reinventing the exact same system that we anyways have had for years in the traditional banking sector?
Great question. So we believe that the new wave of adoptions of all the institutional players coming into the crypto or digital asset space is not only the access that they need, it's entire different sets of requirements and demanding standards. So we believe that the institutions and the new wave of adoptions actually values more of the reliabilities, the trust and controls, no matter how the capitals are deployed or risk are managed and where the capitals, the assets are segregated or safeguarded. So a short answer to your question is definitely no. We are not only simply reinventing or rebuilding everything that the traditional finance was doing. We are actually building a new set of infrastructures that gathers the advantages from both sides, both the traditional finance in terms of transparencies, regulations, the very matured system of reporting and the governance, combined with the technology advancement of that's enabled through crypto and blockchain in terms of the zero knowledge proof, the transparency that's not only be controlled with a few insiders, but also the general public. So I think we are at our core, we don't think we are only building the product, but rather a foundation that enables the bigger wave of the general public's adoption of the digital assets to be possible, and also to enable the opportunities that did not exist before.
Jacques-Olivier, you are
Yeah,
from
I fully agree on that. I mean, we are at a turning point where you can choose to stay and having only a crypto world without any relation with that was the initial DNA of crypto, to be a standalone. I think now the capability that we have to reach more and more people is to build bridges, and that's the subtitle of today's conference. And those bridges need to be built by actors that can be trusted, as you just said, both on the crypto world and on the fiat world.
Peter?
Well, we're not actually building anything other than maybe a policy framework for the future of finance. And what we see is that the current policy and regulatory framework governing financial services is a reflection of the state of the art of the technology, the way it was when this framework was developed. At the time, because of the way technology was and the way the institutions were organized, you have various stages in a financial transaction. You've got the pre-contracting or the trading, the clearing, the settlement, the custody, the post-trade servicing, and so on. The asset servicing, all of these functions were separate and sat in separate infrastructures, because that was the only way you could do it, given what technology was at the time. Now, with distributed ledger technology and other digital technologies combined with it, you can basically merge many of these functions in a single transaction, in a single transfer. And that requires that these economic functions, which you basically described, have to be combined into a new set of policy and regulatory principles. And that's what we're really focusing on. And this is not easy because it raises very fundamental legal questions, legal problems. The problems are there to be solved. It's not because something does not have an answer right now. And lawyers keep on going around in circles, sort of go, well, we don't know the answer, we have no clarity on this, we don't know. It's not because they don't know now, or because the rules are not clear now, or not adapted to this new environment, that we will not be able collectively to find answers in the future. We should really not underestimate ourselves. If you are smart enough to code up a smart contract, you're smart enough to come up with a regulatory framework. And even, you don't have to be that smart. Maybe we can vibe code the regulatory framework. Let's have a try.
Thank you very much. Very interesting takes on this. Yoyee, you are acting in a truly global role, so you know the EU, but you also know the rest of the world very well from your day-to-day business. When you look at what we are building and have been building here in Europe with MiCAR compared to the rest of the world, what's your impression? Do they look at Europe with a sense of envy because of the regulatory clarity that we have? Or is it perceived more as a burden and a betrayal of what made crypto? And I encourage you to be very honest. We're not going to take it personally.
Okay. So we are really going through a global footprint to be embracing the regulated way, because we believe that's where the true future lies, when the two worlds, the traditional finance and the digital assets, meet. I wouldn't say that European regulations will be, there is no better or worse, it's just different. We actually get asked this question a lot by the other regulators at the other part of the world. There are different aspects that the different regions of regulators and policymakers focus on. So our experience working with the European and especially the MiCA policies is that we notice MiCA is really focusing on the security of the assets, the protection across the mass public, and also to be the alignment with the existing policies and rules to make the whole financial world one place for everyone to be participate. Because oftentimes, when we talk with especially institutions and nowadays more and more of the retail clients, we notice that they don't only trade digital assets, or they don't only trade stocks, commodities. We are really seeing the lines between the traditional finance and the digital assets. They are no longer a line that's theoretical. It's a line that's constantly being redrawn. So our experience with the MiCA and the European regulations, we fully respect, because we believe the security of the assets is the foundation for everyone. People always talk about how many percentage of the yield we are going to get, and is that like a better yield, better return if we change the type of security that we deal with? But we also care about principles. If the principle got lost, there's no point to get 10% or 12%. So we fully respect and we also embrace that the MiCA rules and guidelines and framework. Yeah. So some other part of the world and the regulations, they might have other focuses, but as you can see how Bybit and Bybit EU is really engaging with the European market and policymakers, that's because our belief truly aligns.
Thank you. Peter, as someone who is also known as the father of MiCA, do you think what the European Union built here can be referred to as a gold standard, or very objectively, is it just a tool to ring-fence Europe from what is coming from outside, including potentially innovative products that cannot be, where we're denying Europeans access to such products and services?
MiCA was designed to onshore crypto activity, European crypto activity on the European market. So if European consumers, European investors want to engage in crypto, they should be able to do so with European service providers. There should be no need for them to go to offshore to exotic palm tree infested islands where people run rather unregulated or maybe even shady operations. They can do it here in Europe. There's no protectionism there. Everyone is welcome to come to the EU, get a license and operate here. What we do not support is people from abroad who do not have a license, who do not comply with the European rules, to solicit and to seek business from Europe. Because if we were to allow that, then there's no point in doing MiCA, because people would just set up outside, not comply with the rules, and then start marketing into the EU. Some people call that protectionism. I just call that common sense, that it's obvious that if you want to do business in a region, you have to comply with the rules of that region. On your other question, am I the father of MiCA? I don't know. Some will have heard me say this. Well, first of all, it was a team effort, but success has many fathers. Failure is an orphan. If you think MiCA is a success, then I'm happy to be its father. If you think it's an abysmal failure, I know nothing about it.
Very good take. Jacques-Olivier, why do you think the crypto industry should trust traditional banking infrastructure? And how does a European banking as a service platform like Xpollens guarantee it won't become a choke point of innovative, fast, and flexible services as many people are used to in the crypto industry?
Well, first of all, if you don't trust a European banking system, who will you trust? Most people already have fiat a lot, and they are investing in crypto assets. But as of today, the majority is on the fiat side. So if you don't trust a financial service institution, then you probably have a problem. You have to set the correct level first of robustness in order not to create that shock point. So you need someone who knows how to manage those payment flows in order to bring the fiat, to build the bridges, and to bring the fiat to the crypto world. You also, and I fully also agree with you on the fact that the customer protection is something very important in Europe, but probably elsewhere in the world as well. So being able to have the correct level of robustness and of trust, thanks to MiCA, thanks to the accreditation we also have from our French regulator ACPR, thanks to the fact that Xpollens is part of the BPC group. So all those kind of security and trust are very important for European consumers.
Thank you. A question to Peter, and then also Jacques-Olivier, I would like to hear your view on this. Peter, do you think we're actually seeing now a convergence between fiat, the traditional payment banking world, and crypto, or is it just a phase of absorption after innovation where the traditional banking world is just absorbing the industry?
No, we're definitely seeing the convergence, and it's the start of it. We haven't seen anything yet. In the not too distant future, there will be no difference really between digital assets and traditional financial assets. It will be, and the trading venues and the brokers and the service providers will be straddling both spheres, and gradually everything will become digitized. I firmly believe that distributed ledger technology and tokenization will become the new operating system for financial markets. How long is this going to take? A few years, 10 years, who knows? But there will be a future in which all financial market infrastructure is going to be distributed ledger based. The reason why I believe that is that imagine there was no financial market infrastructure today at all, and engineers and smart people were asked, go and build some financial market infrastructure. There is no doubt in my mind that they would build it on a distributed ledger, because that's the only thing that makes sense. With the technology that's currently available, it just does not make any sense to set up a system that is siloed infrastructures left, right, and center that all have to constantly reconcile with each other, clear and settle with each other, rack up huge amounts of cost and inefficiencies. The technology is ready, the technology is being rolled out, we're beyond the stage of experimentation. This show is going live, and it will be the dominant show in a couple of years' time. Thank you.
Thank you. Jacques-Olivier, what's your take on this?
What we see is that it's not a merger, but on a user experience point of view, it's very important for people, for you, for me, for everybody to be able to go from one framework to the other without, almost without knowing it, to bring these capabilities, all those new networks to everybody. So having those kind of technology to bring the speed, the transparency that a crypto asset can bring, bringing also the trust, the confidence, the robustness that today's infrastructure have, traditional infrastructure have, will bring those two worlds together. I don't know if at the end one will remain and the other one will fall, but what I know is that the frontier between both will be completely blurred in a couple of years from now.
Okay, thank you very much. Now, for the next question, I want to ask it to all of you, and Yoyee, we can start with you, and it's on purpose a bit controversial. And of course, I also invite you to discuss it. And if you feel that you disagree with the view of someone here, please also happy to raise your voice. Sorry, I lost it. Yes, here. What does a partnership of a crypto platform with a traditional payment services provider actually solve that crypto couldn't solve in the first place natively? Or looking at it from the other side, why would a European customer even need crypto when making payments? After all, the European payment system seems to work just fine.
I think first of all players, it's better for all players to work together. It's an idea of grow the pie together, to grow the business together. So to answer your question, what would a crypto company cannot do natively without the help with or collaboration with the traditional finance banks, for example? As we all mentioned, that we are seeing the assets are really getting together. The lines between different kinds of assets are blurring. Therefore, if you are a customer, when you buy a coffee, you don't want to take out several of your payment methods. Say, okay, today I want to pay $1 with my card, another $1 with my crypto holdings. It's just a very different or not so intuitive way for people to engage with their daily lives. So what we saw previously with the digital asset space, it was most of the economic activities was dominated around trading. So the tools, the infrastructures, the projects, they were based around trading, but now we really want to get integrated with the real world where people can see it, not to talk about it, but really feel that it's something normal. If we stop talking about something, that means something we just accept it as the standard, the normal, so it's nothing abnormal that we need to talk about. Then when we look at how would people spend money on a daily basis, how would people trade their assets, we don't differentiate the traditional assets or digital asset. It's just pure asset together. It's your money, it's your wealth, and you just pick different ways to hold it. Just like if we want to hold different kind of currencies, or we want to hold different kinds of stocks, it's one single unified asset definitions. So when we look at, it's also in Bybit's DNA that we don't want something that is so exclusive that block everybody out. We're always looking forward to collaborations to build an ecosystem together. Therefore, we think it's absolutely essential to work with banks and to make the financial equality all over the world. Because I think people in Europe is kind of privileged and advanced that we have a very robust and safe financial infrastructure for people to feel safe, so that this thing is not in their mind. But crypto is really benefiting other people all over the world who do not have the luxury to enjoy this robust financial infrastructure. So blockchain, the technology, is able to bridge the gap between this developer world, the financial safety, to the other developer world, that they can also have something they can rely on. They can safely feel, okay, when I spend this $2 on the coffee, I will not get my bank account robbed, or I will not lost 50% of my assets out of nowhere. So I think that's really brings the blockchain for good for everybody. And we cannot complete this dream or this goal within the crypto industrial companies ourselves. We would definitely have to seek partnerships, working with the banks, the regulators, to get this out there.
Thank you. Very, very interesting take. Jacques-Olivier, from your side, how do you see it?
I fully agree. It's today each world is bringing very interesting things to the other that they cannot do on their own. Let's take fiat. If you want to do quickly some send money abroad, well. Before that, we used to have traditional banking system that will take 1 day, 2 days, 3 days to get money at another point of the world. Today, it can be done on, ramp off in 10 seconds. So that's just marvelous, and it's one use case among lots of others, capability to invest 24/7. Also very important when you have stock markets that are closed at night or during weekends. So this world will bring to the, let's say, traditional world those new way of doing things, and the traditional world is now also bringing confidence, part of user experience as well, because as you said in your introduction, before that you needed your key, you needed lots of things to be able to act with crypto. So both worlds are coming together, and that's for the best.
Thank you. Peter?
Well, I do not think that at this stage European consumers necessarily need crypto payments or stablecoin payments or whatever, because our payment systems are very efficient. They're also very costly to operate, not for the consumer, not for the end user, but for the system as a whole. Instant payments are technically very complex, and they have quite significant operational costs. So I can well imagine that financial institutions that are looking at how can we run our systems more efficiently and cheaper, because we have to meet the regulatory standard of instant payment, that they are going to transfer to tokenized interbank systems because it is cheaper and faster. Where you also see uptake of tokenized payment instruments is where your banking rails do not reach to the connection point you need to reach. A bank account is what someone in the industry calls a single trick pony. From a bank account, you can only reach another bank account. Now that's fine if the other person has a bank account and is in a region or in a connection where you can link that. But take, for example, in Europe, and you want to transfer money from your bank account to someone in the US. It's a developed country. This is going to be painful, expensive, and slow. But at least you can sort of still reach it. But if you want to make a payment from your bank account to Central Africa or to many Southeast Asian countries, it's just not gonna work. Don't even try.
Or it will be very costly.
well, it'll be costly and very frustrating and slow and everything. But also within Southeast Asia, for example, many countries have no difficulty trading goods and services between themselves, but their banking rails are not connected, so they can't pay each other. That's where tokenized payment instruments, and whether this is central bank digital currency, tokenized deposits, stable coins, something else, doesn't matter. What matters is that it's undistributed ledger technology and that it is tokenized and that it is instant.
Yeah, very good point. And I think maybe it's not relevant for the retail customer, but from my own experience, I've been a lawyer in the finance industry the 10 years before I joined Bybit. When you have to pay, for example, 500 million, a billion, for example, to pay the purchase price for an acquisition of a company, I literally was part of the teams that were preparing just one payment for a week, and then everybody was sitting at the notary, crossing fingers, hoping that the payment arrives on the same day and is not stuck in some compliance filter, or that the system is overflown. So I think this is also a very important point, talking about infrastructure, that it works if you look at small individual transactions, but once it gets more complex, be it international transactions, but also complex transactions within the EU, there are some bottlenecks. Now, again, a question to all of you, and let's start with Peter this time. let's talk about the market reality and regulation. I would say Mika is a success, so I think you can call yourself the father.
Okay.
And I think it's on paper very good. There's safeguarding requirements, and also I can now recommend somebody to say, look, it doesn't really matter if you have a euro stablecoin regulated or a deposit at an e-money institute, because it's essentially the same level of protection. However, when we look at the market reality, we see two things. First of all, and I'm talking now at stablecoins, the vast majority, I think we're around 60% globally, is USDT, which is from a European perspective, unregulated stablecoin. And ever since MiCA came into force, and also there's restrictions, exchanges cannot publicly promote USDT anymore in Europe, it didn't seem to harm USDT's popularity. The second aspect, and here it's even worse from a European perspective, if you look at the US dollar denominated stablecoins, we're in the 80-90% range. Was MiCA in that sense just a paper tiger, or does it just need some time for the market reality to adapt?
Well, MiCA is currency neutral, so we took no view as to which denomination the stablecoins would be in. Could be any denomination, any official currency from any country is possible. What we did indeed see in the market was that the market interest in euro-denominated stablecoins is less big than we would hope for, but you can't impose market interest by regulation. Some people think you can do that, but you can't. The market is the market. And we can wish there was more demand for euro stablecoins, but there isn't. Why is that? Is that because for many users, the dollar is the dominant currency? Take, for example, but you've got this also in other markets. Take commodity markets. Commodity markets are priced in dollars, whether you like it or not. I give another example. Diamonds, for example. Antwerp in Belgium is the largest diamond center in the world. All the payments are in dollars. Why are they in dollars? That's just the way these markets operate. But the only way to promote more euro-denominated stablecoins is to have a positive attitude towards stablecoins. You can't really promote a euro stablecoin and then sort of cast doubt on the value of stablecoins. But if we want to see a bigger role, an international role of the euro, this will have to come through more euro-denominated stablecoins. So those that want a bigger role for the euro internationally should support euro-denominated stablecoins.
And very quickly, do you think the legislator should take action to support this, or are we good on the regulatory side and it's just a market issue?
I think it's a market issue. I do not know how you can legislate for market demand.
Well, I think stability is also very important for most markets. So having MiCA on the one hand and having European Union that can bring stability also on the other end can be a way to for the end customers and for the market to trust euro in the coming years. And so I hope this will increase the euro part of the market.
Thank you. Yoyee, you're working day-to-day with institutional customers. Why is USDT still the number one stablecoin? You might argue especially institutionals would want to invest or hold a very, very regulated stablecoin like USDC, EuroC.
Institution clients are actually very risk sensitive. So they don't, I wouldn't say any of the institutions at large will hold 100% in USDT specifically, because that's just irrational from asset allocation and the risk diversification's perspective. And we do see demand, especially from European dominated institutional clients. They want euro stablecoins because their daily expense, the rent they pay, the employee salary they pay, the expenses are all denominated in euros. If they would have their revenues, trading revenues coming from the US dollar denominated stablecoins, yet their expenses are mostly on euro denominated stablecoins, they would suffer another layer of the FX exposure. So it's not rational for them. I think I agree that it's mostly driven by the market, yet the demand is there. I agree with Peter that if we want to see a brighter or better future for euro-denominated stablecoin, we need more and better euro-denominated stablecoin projects to be a available option for people who are demanding those euro stablecoins. And we see the things change very fast in the crypto space. So before USDT and in between all these years, there were other stablecoins that gained the popularity for some time and then they come and go. So I believe if we have really great and better euro-denominated stablecoins, it will gain popularity and the landscape will change very fast because we do see demand there.
Thank you. Unfortunately, we're already running out of time. Very, very interesting takes and discussions. As a very last lightning round, I want to know from all of you, 10 years from now, a retail customer is opening their app on their phone, if we still have phones then, VR glasses, whatever it might be, to manage to look if they've received their salary, to manage their investment. Do you think it's going to be a traditional banking app who has integrated crypto, or do you think it's going to be one of the crypto players who have merged and taken over the traditional fiat payment space?
Maybe we would still have phone, but maybe we do not have apps given all the AI, right? We just open the agent can do everything for you. So I think that's the direction.
But the question was more like, do you think the traditional banks will make it into a crypto space, or do you think the crypto players will take over the banking space in 10 years from now?
I think we will meet in between. Collaborations are happening.
Good.
Yeah, I fully agree on that. It won't be one or the other. It will be a mixed. And how fintech is working together. If you need some KYC parts, if you need some different parts, you will add all those different parts to have a good user experience. And the user experience will be you have everything available and probably no phone.
Thank you, Peter.
I agree on that. It's whoever offers the best user experience. Is that a bank? Then the bank will integrate crypto, its app or its agent, or your agent will go to a banking app that has crypto links as well. If the user experience is better from an interface presented by a crypto firm, then that will be preferred. So it really is going to be a battle, not banks against crypto, but who gets control over the interface. And companies will start competing over the interface of the wallet. You will have a wallet that has many rails attached to it, banking rails, crypto rails, stablecoin rails, money market funds rails, equity rails, whatever. All of these will be in a wallet, and there will be a huge competition at the retail level as for getting your wallet onto a consumer's phone, ideally on the first page, because if you're not on the first page of someone's phone, you don't count.
So what we're already seeing, it's all about grabbing the user's attention and focus, and not so much promoting a specific technology or regulation. Thank you. With that words, thank you very much, Yoyee. Thank you very much, Jacques-Olivier. Thank you very much, Peter. It was a pleasure. Thank you very much to all of you for having us here. And yes, I'm looking forward to the ongoing conversations. Thank you.
Thank you very much.
Thank you.
Welcome to Signal Week.